So I can admit when I've been stubborn, and I have been so stubborn about learning anything about health savings accounts because I thought I couldn't get one, and I also thought I didn't need one, but I was wrong twice. Hi everyone, this is Camilla, the Focus Spender, and welcome to my channel where I teach you how to get out of debt, save more money, and invest so that you can build wealth and leave a lasting legacy. So I have been leaving money on the table, like a lot of money on the table. I've constantly heard from other finance people on the internet that their favorite account was an HSA account, a health savings account, and I kind of just ignored it because I didn't see how it would benefit me, and I also didn't think I could get one. But recently I had to pay for a large medical expense that my insurance would not cover, and I needed to find a creative solution because I didn't just want to go into my bank account and drain it. I wanted to find other ways to help pay for this expense. So then I decided, you know what? Let me start looking into HSAs, and maybe it's something that I can use. And I'm glad I did because I'm using it right now. So in this video, I'm going to be sharing with you what an HSA account is, why you absolutely need one even if you don't have a looming medical expense, how you qualify for one, and a tour of my account with Lively. And I'm also going to share with you the creative way I'm using my HSA account. So what is a HSA, or health savings account? A health savings account is a tax-advantaged medical savings account available to taxpayers in the United States who are enrolled in a high deductible health plan. The funds contributed to an account are not subject to federal income tax at the time of deposit. In 2022, you can contribute up to $3,650 in your account if you're an individual, or $7,300 for a family account. But in 2023, that's going to increase to $3,850 for an individual, or $750 for a family. But if you're over 55, you can contribute an additional $1,000. So why should you get one even if you don't have any looming medical expenses coming up? Well, I'm going to give you 3 reasons. First, the money goes in pre-tax, meaning you're going to lower your taxable income. If your HSA is set up through your provider, it's going to come out through your payroll deductions. But if you're like me, you're going to contribute the money, and then when you file your taxes, you're going to just write them off on your taxes, lowering your taxable income. Second, even though the account says savings account, you can actually use it as an investment account. So think of it like a traditional IRA where you're taking money pre-tax and you're putting it into an investment account and using that money to invest. So in an HSA account, you can actually invest in stocks, bonds, ETFs, whatever you want, and the money is going to grow tax-free. So just like your traditional IRA, your Roth IRA, your 401k, as you're gaining interest, as you're earning dividends throughout the years, as long as you're not using that money, as long as you're not pulling that money out, you're not being subject to taxes. So every year the money can just grow without being subject to taxes. And third, as long as you're withdrawing the money for medical expenses, you're never taxed on that money again. So basically the money goes in tax-free, the money grows tax-free, and the money is withdrawn tax-free. Now, the only caveat is once you've hit 65, you can then use the money for non-medical expenses without any penalty, but you will have to pay taxes on the money if you're using the money for non-medical expenses. But at that point, the money is going to be taxed at whatever tax rate you're in. But once you retire, likely you'll be in a lower tax bracket than you're in right now, so you're going to be paying less taxes on the money anyway. So even if you never need the money for medical expenses, you're in a win-win situation. So how can you qualify for an HSA account? I assumed that I did not qualify for an HSA account because my job does not offer an account. So I thought, well, they don't offer one, so then I can't get one. But I was wrong, because you can apply for an HSA account completely on your own. You don't have to do it through your job. The only thing that you need to make sure is that you are enrolled in a high deductible health plan. Meaning in the year 2022, your deductible before your health insurance kicks in is at least $1,400, and in 2023 that will go up to $1,500. And if you're unsure whether or not you're in a high deductible health plan or HDHP, literally all you have to do is ask your benefits provider, hey, is my health insurance considered a high deductible health plan? As long as they say yes, you are eligible to apply for an HSA account. The one thing you want to find out from them at that point is if you have to apply for an HSA account through them, meaning they already have a provider, or if you can do it on your own. If you can do it on your own, you can literally just Google best HSA accounts, which is what I did. And 2 accounts have popped up over and over again, and that's Fidelity and that's Lively. And I chose to open an account with Lively. And the process was super simple. I've already filed for reimbursement and I was able to get my money back within 2 days. So now I'm going to give you a quick tour of my Lively HSA account. So here we are in my Lively HSA account. It's pretty simple. It shows my current available balance. It shows my recent reimbursement, and it shows the last time I contributed money. So when I opened this account, I pretty much put in the full balance right away. And the last contribution was this $1,499, and then I went ahead and started to file for reimbursements. Like I said, this money took about 2 days to come in. So when we scroll down, you can see your contributions, you can see your investment and your spending summary. So here you can see that I put in the full $36.50 for the year. If I wanted to do recurring contributions, meaning throughout the year I want to spread out when I invest the money, I can adjust my contributions by clicking here, and then I can set up a recurring transaction or I can set up a one-time transaction. So as you can see, I have reached the max for 2022. In this section, you can explore investment options, and we'll look at that in just 1 second. And here you can link your health insurance card so that you can make sure that you are reaching the deductible before you start using this money. I have spent all of my deductible, everything is gone. So that lets me know that I can go ahead and start using my HSA account. You also get a debit card with HSA. They give you guidelines on how to use it when you're out and about, but you can use the card whenever you're shopping if you want to use the money right away. And then going back to the investment section, if you click on Explore Investment Options, it will take you to this section where you have a couple of options on how to invest your money. So you can do a HSA guided portfolio with Devenir. This does cost an annual management fee of 0.5%, but they will do all the hard work of helping you start your account. Or you can select Schwab Health Savings Brokerage account with Charles Schwab, and then that way you can invest your money. You can buy stocks, you can buy bonds, CDs, ETFs, mutual funds, etc. using Charles Schwab, which is obviously an established, reputable company that everyone's heard of. So if I click on Get Started, I just want to show you one thing. This is the enrollment process. So if you have at least $3,000 in your account and you invest above that amount, there is no additional fee. But if you are starting from zero and you want to invest right away, there is a $24 annual fee. So that's something to think about, whether you want to go ahead and start investing right away, or if you want to wait until you have at least $3,000 in your account and then you're just investing the above. So in the beginning of the video, I mentioned the creative way that I'm using my HSA account. In theory, if this was a normal year where I didn't have a lot of medical expenses, all I would do was put the money in my HSA account, invest it, and just let the money grow. But because I wanted to maximize my tax benefits and I wanted to manage cash flow, what I decided to do was open the account, fund the account to the max, and then when I had to use the money, I paid for the expense on my credit card so that I could get the points. I immediately filed for a reimbursement to test everything out. The money came within 2 days, and I put the money into my high yield savings account because I don't want the money just sitting in my checking account where it's not growing. So I put it into my high yield savings account so the money will gain some interest, and when I'm ready to pay the credit card bill, then I can take the money and pay the credit card bill. But in reality, if you're using this account to strategically build wealth, you wouldn't just use it for every little expense. You would also have a flexible spending account where you can use that money for your day-to-day expenses, and you could just let this money grow. Now, if you want to try out the Lively HSA account, you can visit the link in my bio. It's my affiliate link. And be sure to like this video if you found it helpful and share it with someone who needs this information. Thank you for watching. I'll see you next time. Bye-bye.